There's a piece of plastic in your wallet right now that's engineered to keep you poor. It promises convenience, rewards, and financial flexibility, but it's actually the most profitable debt trap ever invented by the banking system. Credit cards generate over $120 billion in interest and fees annually for banks in the US alone, and that money comes directly from people who thought they were just making everyday purchases. If you carry a balance, pay late fees, or use your card for cash advances, you're not a customer, you're the product. And the game is rigged so perfectly that most people never realize they're losing until they're drowning in debt they can't escape. Here's what banks don't want you to understand. Credit cards aren't designed for the people who pay them off every month. Those responsible users are called deadbeats in banking industry jargon, literally because they don't generate profit. The real money comes from revolvers, people who carry balances month to month, paying 18%, 24%, sometimes 29% interest on purchases they made months or years ago. The cost of living keeps rising, wages stay flat, and that credit card becomes the gap filler, the emergency fund, the way to keep your head above water. Except it's not keeping you afloat. It's an anchor pulling you deeper into the debt system with compound interest that turns a $1,000 purchase into $20,500, paid over years. But the trap goes deeper than just high interest rates. Credit card companies use psychological manipulation, deliberately confusing terms, minimum payment structures designed to maximize their profit and minimize your progress, and penalties calibrated to extract maximum wealth from people in financial distress. And it works spectacularly. Americans alone carry over $1 trillion in credit card debt, with the average household paying over $1,000 per year just in interest. That's not purchasing power. That's wealth extraction on a massive scale. Stick with me, and I'll expose exactly how credit cards are engineered to trap you, why the system is designed to keep you in perpetual debt, and what you need to know to escape before compound interest destroys your financial future. Ready to see the trap that's probably already caught you? Let's break down the most profitable scam in modern banking. Let's start with why credit cards make you spend more money than you would with cash. Because understanding this manipulation is the first step to seeing the trap. Multiple studies have proven that people spend 12 to 18% more when using credit cards versus cash, and this isn't random. It's the result of deliberate design that exploits how your brain processes transactions. When you hand over physical cash, you feel the pain of payment. Your brain registers loss. You see your wallet getting thinner. There's psychological friction in the transaction. But when you swipe a card, that friction disappears. It's just plastic touching a reader. No visible loss, no emotional pain. The purchase feels almost free, or at least disconnected from the consequence of losing money. The Sabio Observer recognizes this as behavioral engineering, not accident. Credit card companies know exactly what they're doing when they make cards smooth, when they add rewards programs that make you feel like you're winning, when they increase your credit limit automatically to remove spending constraints. They've studied the psychology obsessively because every extra dollar you spend increases their revenue. That rewards program offering 2% cash back? You're spending 12 to 18% more to get it, making them 10-16% profit on your psychological manipulation. That increased credit limit that makes you feel trusted and valued? It's removing your natural spending restraint, encouraging you to use debt for purchases you'd never make with cash. The entire system is designed to disconnect the pain of payment from the act of purchasing, turning you into a spending machine. And here's where it gets truly devious. Credit cards don't just make individual purchases feel painless. They accumulate debt invisibly. With cash, when it's gone, it's gone. You can't spend what you don't have. But credit cards let you spend future money, let you accumulate purchases across days, weeks, months, and the total only hits you when the statement arrives. By then, the purchases feel like ancient history, disconnected from the bill you're now facing. This delayed consequence is psychological poison. You're not making one decision to go $5,000 into debt. You're making 50 small decisions that feel inconsequential in the moment, but compound into financial catastrophe. The banking system profits from every card swipe, and they've engineered the experience to maximize the number of swipes you make without feeling the accumulating weight until you're already trapped. But the real profit isn't in making you spend more. It's in what happens when you can't pay it all back. Now let's expose the most insidious feature of credit cards, the minimum payment structure that seems helpful, but is actually designed to keep you in debt as long as possible while extracting maximum interest. When your credit card statement arrives showing you owe $5,000, it doesn't demand you pay it all at once. Instead, it helpfully shows a minimum payment of maybe $150. Seems reasonable, right? You can manage $150, so you pay it, thinking you're being responsible, not realizing you just fell into a trap that will cost you years and thousands in interest. Here's the mathematics of how they rob you. That minimum payment is typically calculated as 2 to 3% of your balance, or just enough to cover the interest plus a tiny sliver of principal. On a $5,000 balance at 20% interest, you're accruing about $83 in interest per month. If you pay the $150 minimum, only $67 goes toward your actual debt. At that rate, paying just the minimum, it will take you over 30 years to pay off that $5,000, and you'll pay over $9,000 in interest. Your $5,000 debt cost you $14,000 total, and the bank generated that extra $9,000 without creating any value, just by designing the minimum payment to trap you. This isn't disclosed clearly, of course. The statement shows your minimum payment in large, friendly numbers. The total interest you'll pay if you only make minimums, that's buried in fine print if mentioned at all. The debt system relies on this structure because it transforms temporary borrowing into permanent revenue streams. Banks don't want you to pay off credit cards quickly. They want you to carry balances for decades, paying interest forever. This is why they calculate minimums so low. Why they'll automatically increase your limit to keep you borrowing more. Why they send you balance transfer offers with teaser rates that reset to 24% after 6 months. Every design decision optimizes for long-term debt extraction, and the psychological impact is devastating. Paying the minimum feels responsible, feels like you're managing your debt, when in reality, you're guaranteeing you'll never escape. The cost of living rises, an emergency happens, you charge a bit more, the balance grows despite your payments, and suddenly you're trapped in a debt cycle where you're paying hundreds per month just to stay in the same place. That's not a side effect, that's the business model. And when life happens and you can't even make the minimum, that's when the real penalties begin. Let's talk about how credit card companies make billions beyond just interest, through a complex system of fees and penalties designed to extract maximum wealth from people experiencing financial difficulty. Miss a payment by even one day? Late fee, often $35 to $40. Go over your credit limit? Over-limit fee. Want cash from your credit card? Cash advance fee of 3 to 5%, plus interest that starts accruing immediately with no grace period, usually at a higher rate than purchases. The fee structure isn't about covering costs. It's about punishing financial stress and profiting from desperation. And here's where it gets truly predatory. These fees and penalties are calibrated to hit hardest when you can least afford it. If you're financially stable, you don't miss payments or need cash advances. But if you're struggling, if an emergency hit, if you're juggling bills to keep the lights on, that's when these fees pile on, making your situation exponentially worse. You missed a payment because money was tight. Now you owe an extra $40, which makes next month tighter, increasing the chance you'll miss again or trigger another fee. It's a downward spiral engineered into the fee structure. Banks know exactly what they're doing. They're extracting maximum profit from financial distress, and they've lobbied to keep it legal. The numbers reveal the scale of extraction. Credit card companies collect over $15 billion annually just in late fees. Another $5+ billion in over-limit fees, cash advance fees, balance transfer fees, foreign transaction fees. It all adds up to a massive wealth transfer from those struggling to pay to the banking system that profits from that struggle. This is why the financial elite love credit cards. They're perpetual profit machines that generate revenue from interest, from spending behavior, from fees, and from penalties. Every aspect is optimized for extraction. Meanwhile, the debt crisis deepens, economic inequality grows, and people work harder just to service debt on purchases they made years ago. The game is rigged, the house always wins, and the credit card in your wallet is the primary tool of your own financial enslavement. Unless you understand the game well enough to stop playing it on their terms. So there you have it. Credit cards exposed as what they really are. Not convenient financial tools, but sophisticated debt traps engineered to extract wealth through psychological manipulation, mathematical trickery, and predatory fee structures. The banking system makes over $120 billion per year from credit card operations, and that money comes from interest you pay on past purchases, fees you incur during financial stress, and spending behavior they've deliberately manipulated you into. You're not a customer being served. You're a profit center being exploited. Now here's the moment of decision. Are you going to keep playing their game? Swiping that card for small purchases that accumulate into massive debt, paying minimums that guarantee decades of interest payments, triggering fees that profit from your financial struggles? Or are you going to see the trap clearly and make changes that protect your financial future? Because every month you carry a credit card balance, every dollar you pay in interest, every fee you trigger, that's wealth flowing out of your life into the banking system. And it's preventable if you understand the mechanism. Here's what I want you to do this week. If you have credit card debt, calculate your total balance across all cards. Then go to a minimum payment calculator online and see how long it will take to pay off at minimum payments and how much total interest you'll pay. Write that number down. Sit with it. Feel the weight of it. That's the cost of the trap you're in. Then make a plan. Not to pay minimums, but to aggressively pay down high-interest debt, to stop using credit cards for new purchases until you're out, to break the cycle they've engineered to keep you trapped. It won't be easy, but neither is spending decades paying interest on the past. And if this video opened your eyes to how credit cards are designed to trap you, if you now see the psychological manipulation, the mathematical scam, the predatory fee structure for what they really are, subscribe to this channel and turn on notifications. Because the next video continues this journey. I'm going to expose the student loan system, another debt trap that's enslaving an entire generation, and show you why that debt is even harder to escape than credit cards. The banking system has many tools to keep you poor. Understanding them is the first step to breaking free.